I am the president and founder of the Mortgage Calculator. We are a lender that specializes in alternative documentation programs and non-QM loans, as well as conventional FHA, VA, USDA, EA, and all the traditional loans as well. I'd like to thank everybody for joining us today to go over the daily rates live. This is just something we try to do every morning to inform our team as well as our potential borrowers what we have going on in the market. So today I have my co-host Jose Gonzalez, 27 years experience, our sales manager here at the Mortgage Calculator. We'll also go over some of our specialty programs, which today we will talk about our non-QM loan programs for primary homes for self-employed borrowers. So these programs go up to 90 LTV with no mortgage insurance, and they are available for up to 600 above credit typically for most of our banks and partners. Up to $3 million loan, 30-year fix. We do have interest only available on those. They all require 2 years self-employment for any of those documentations, but we can use 1 year of income, but you still have to have 2 years of employment. And these are available for purchase and refinance. So we'll have Jose talk a little bit about these. Our most popular programs in this space for the non-QM primary homes are bank statements and P&L programs. So Jose will talk a little bit about the differences in those here in a minute. But first, let me kind of get into our regular content here. And we'll just go over the daily rates going on. So here's a tool that we've built for our team. Remember, get with one of our licensed mortgage professionals so they can actually give you a full quote. This is a pricing tool that we've built for our team just to go through our pricing on a daily basis and give us some indications here that we can use for the show and also just use to get our customers some general knowledge. So we always want to go through the rates for today. We're going to always typically set up an 80 LTV purchase for a conforming conventional loan. Purchase 30-year fixed, pretty much what everybody's used to, standard loan, primary, single family, and we're going to use our state and county that our office is based in for all of these quotes here, and 760 FICO and 40% debt to income ratio here is going to be set. Everything else will keep the same for all of these little quotes that we'll go through. And let's check out what it's looking like today in the marketplace. Again, this is a live tool. So we do have some verifications since this is really pulling live data from our banks and partners. So we partner with over 100 banks and different mortgage outlets in order to offer all kinds of different programs. Specifically, the non-QM is what we're very passionate about. But we also have, as you see here, tons of different Fannie Mae, Freddie Mac, all the traditional conforming loan programs available. And this is a specialty program, Home Possible, so we won't look at that. But we can queue in here on our conforming 30-year fix. That's a standard loan product there for a conventional loan. And for relatively no cost, we are at a 6.875 rate currently in the marketplace. So we can also do a couple tweaks here on the quote. Typically, I like to also show a 1% buy down option. So let me run that as well real quick. So we can see a rate with a little bit of buy down, which is what most of our customers are doing these days in order to buy the rate down a little bit because of the high rate environment. There are also the 2-1 buy downs and the temporary buy downs and all those cool things that we have available. Again, the Home Ready from Fannie Mae and the Home Possible from Freddie Mac are specialty programs for people typically under an area median income. So let's scroll down to the first standard program that we have from our banks and partners. And it looks like the first one is here or here. So for about one discount point, we're about 6.5% rate here. And right here, this would probably be a better quote, 6.5 rate for 0.875 in cost. So these are the options that everybody's used to. Now we have some other options available as well that we always want to check out. The most common request, if someone doesn't qualify for conventional conforming, is a FHA loan. So we have FHA products available as well. If we keep everything the same, do a 1-point buy down, primary, 30-year fixed, everything else staying the same, we'll see that the FHA rates are a little bit lower typically. So our banks and partners are offering FHA 30-year fixed at 5.75. But keep in mind that there are extra costs with FHA. And that's why you see the APR over here a little bit higher, because there is monthly mortgage insurance on all FHA loans and upfront mortgage insurance as well, or FHA funding fee is what some people also call it. So always QN on the APR, but obviously a great option here for those who may not qualify under conforming limits. Typically, the highest DTI is a 49. Typically, FHA, we can go up to 56, 57 there. Now, if a customer doesn't qualify for any of these traditional programs, the beautiful thing here at the Mortgage Calculator is we specialize in non-QM. So if we go back here to our calculator and we switch from FHA to expanded, this opens our options. We do have VA and USDA available as well. Those are specialty programs. If you are in the armed forces and serve, we thank you. And if you qualify for VA, please get with one of our loan officers. And if you're looking at a property in a rural area, USDA qualifies for those. So if you think you may qualify for USDA, please ask for a quote for those. But what we're passionate about here is what we call expanded guidelines, aka non-QM or non-conforming. So if we keep everything else the same here, we can still do primary home, still everything else the same, but we can change our income verification documentation when we are in the non-QM space. So Jose will go through some detailed quotes here in a minute to compare a couple different options that we have available here. But just for the show here today, just to show the rates live, we're going to do our most common option, which is the 12-month bank statement loan option for our self-employed borrowers. And we're going to use those 12 months of bank statements for those that are self-employed, typically our realtor partners we love to work with. We also have the gig economy type people that are Uber drivers and stuff like that. So we use their 12 months of bank statements to calculate a debt to income ratio here. So in this case, if the borrower is self-employed and we calculate a 40 DTI ratio with everything else the same, we do have options. So these are for borrowers who may not otherwise qualify. We have some great opportunities here. Some of our banks and partners have some specialty programs for 7.25 rate, but that has a high cost. So I would queue in probably right here on some of these alternative documentation programs that are right around an 8% rate for right around 1 point in cost. This partner has an alt doc for 8.25 for 1 point in cost. So they all vary, and please get with one of our licensed loan officers that can navigate you through these dozens of partners that we have that have alternative documentation programs. Some of them have various tweaks on the program and ways they analyze your income. So please get with our loan officers who can work you into the program that works best for you. Jose will explain a little bit more in detail about what we look at when we look at those income qualifications, so he can compare the difference between a bank statement, one here, versus some of the other options we have, such as P&L, 1099, etc. But real quick, before we jump off the simulator here, I want to run a quote on our more popular programs for investors. So we do a lot of investment rental properties. So I'm going to switch here to a quote for an investment property, 20% down, a conforming loan here with a 40 DTI, everything else staying the same. Let's see what conventional is offering. Now remember, conventional is run by GSEs, which are the government-sponsored entities, Fannie Mae and Freddie Mac. And they do have a, this last year, they put in a very large penalty or cost to investment properties. So you see here, the rates are much higher with much, much higher discount points or costs to you, the borrower, right? So these options are less popular these days as the GSEs and the conforming markets have basically penalized those investors that are looking to buy rental properties under the conforming programs. So we see much higher rates than usual, and we see much higher discount points than usual. But here's some options that we have from 6.875 up into the 7s, and obviously we're going to find the best combination that's going to have a decent amount of discount points for a decent rate. But the conventional market for investment property loans has obviously been hit pretty hard here with a lot of extra costs. So the more popular options that I'd like to show, again, are what's in the expanded guidelines or the non-QM space. So when we switch over here to expanded, we switch to investment properties, we have all of our great alternative documentation options we can use in order to get our investors into investment properties. So obviously there's a lot of great options that Jose will talk about more in detail, but the one that we love here and the most popular one is called the DSCR, debt service coverage ratio, which basically doesn't require any income, doesn't require any employment, and just uses the property rent income to cover the cost of that property. So these are great for our investors to get, dozens of properties at one time. They don't have to worry about those limits that are imposed by the conventional programs. These are a little bit higher rates, but for most investors, these are still great options. Let me tweak this to make sure we're set up correctly. Sorry, I was at 81 LTV. And this looks good to go. So this is going to be with a 3-year prepayment. Whenever we do an expanded non-QM program, we typically add a prepayment penalty when it's an investment property. That's common for the non-QM space. So just talk with one of our licensed loan officers about how to navigate through that. There are other options here, but this is the most common. So you see here we have our DSCR. You can also see that there are dozens and dozens of banks and partners that we have with programs here for this. So make sure you get with our loan officers to find out what your property will qualify for, what your potential property will. But this is our top program right now at one discount point in cost, 8.99 rate, which is a great opportunity for investors. You see, it's really not that much higher than conventional with no documentation whatsoever. And these are great opportunities for our investors to get into rental properties and multiple at the same time as a great alternative to hard money, etc. So we have a plethora of programs from 8.99 all the way up into 9s and 10s. Obviously, these are specialty. Maybe we have to use one of these specialty programs for if you're purchasing a short-term rental and we need to use the short-term rental income from Airbnb, etc. So a lot of different reasons we would use some of these other programs, maybe a little bit variation in rate and cost, but these are great options for our investors out there. So now that we've gone through kind of the general landscape this morning, these are live rates from our banks and partners as of this morning that came out. I'd like to bring in Jose to talk a little bit more, as we mentioned, about our popular programs under the primary and under the expanded guidelines. There's a lot of variation here under these different income types. So Jose, can you talk a little bit? Let me go ahead and unshare my screen. Can you talk a little bit about the different types that you're going to present? And then I'll go ahead and throw your screen up there live and you can present your quotes.
Sure. How you doing? So definitely, bank statement options are basically is the most popular non-QM alternative document option right now. As we know, a lot of the self-employed borrowers, as the rates went up, transitioned from trying to get a conforming loan to trying to get a bank statement loan to be able to qualify for the higher amount at the higher rate. So I have 4 quotes set up here, and want to make sure that you're sharing my screen here because I want to get into the first option, which would be a bank statement option for primary residence. So in this option, it's a 90% loan to value. I set my credit parameters at the higher amounts, 800 credit score, um, and purchase price of 500, loan amount of 450. So in this example right here, um, we have some pretty good options. Our no additional cost option comes in at 9.875% rate with buy down as low as 8.625. And keep in mind that this is 90% loan to value, and this is also no mortgage insurance included at these rates. So any mortgage insurance type scenario is already taken into consideration in the interest rate, as non-QM loans do not ever have additional private mortgage insurance. So you see here, this option is primary. Now I'm going to show you a bank statement option for investment properties, which again, the bank statement option, just like the P&L option that I'm going to show you next, are not limited to investment nor primary nor second home. It's whatever occupancy type you want, and it's just strictly the income type. So in this scenario here, we can go as high as 85% LTV with bank statements on the investment property, with the lowest cost option is 10.125% rate, with buy down as low as 9.375%. So this is a very good option. Again, bank statement, 15% down, investment property. Oh, and I also forgot to mention this is with a 3-year prepay. If you add the 5-year prepay, it will reduce your rate a little bit, anywhere from from an eighth to a quarter of a percent lower in the rate with the 5-year prepay. So now, typically, bank statement option, great option, but there are some challenges to the bank statement option if you have declining trends to the deposits, or if you have very large deposits that can't be sourced as income, or worse, if you have too many NSFs in a 12-month period. Usually, most of the guidelines call for anything more than 3 NSFs in a 12-month period will present issues and possibly cause that bank statement loan to be denied. So we do have options for that. We have our profit and loss program, which is also, again, only for self-employed borrowers, just like the bank statement program, but that is the solution if you have bank deposits, large bank deposits that can't be sourced as business income, if you have too many NSS, if you have declining deposit trends, then the P&L option is definitely the way to go. Very easy, not much of a difference either in the rates. Now, this is the 10% down primary P&L option. Uh, Lowest cost rate 10.5%, with buy downs possible to 9.5%. This is, again, primary purchase. And investment, you can also go 15% down. Pretty good rates as well. You're looking at 10.125 lowest cost option, with buy down possible to 9.375. Now, I want to show here P&L. You're looking at 9.375 lowest option there. Bank statement, 9.375 lowest option there, same cost. So, I mean, what that's telling you there is essentially the rate and the pricing is the same on the P&L. It's just a different structure. Obviously, the P&L a little bit more complicated because you have to have the profit and loss prepared by the tax preparer or accountant or CPA, but it is an unaudited profit and loss report. So it should be pretty easy for the tax preparer to put it together. So again, not much of a difference there at all if you're looking on the investment side. So very good options there, Nick, for our non-QM borrowers that have document challenges, that may have issues with tax returns. I mean, it's like when we're given that consultation, and it's like we give them the choice: do you want to push it full doc and pay $20,000-$30,000 to the tax man, or do you want to just deal with what you have, continue with your current tax strategies, and just pay a little bit higher interest rate, a little bit higher payment, but be able to continue managing your finances in the same manner as they always have been, and not trying to push it just to try to qualify for a loan?
Yes, sir. Well, thank you so much. As Jose mentioned, we work with borrowers at their speed, right? So if you're a self-employed borrower and you file a certain way and you need to use these programs we have, we're here for you. If you'd like to use a conventional program, we're here for you. So we love to be able to help our borrowers who may not be able to otherwise qualify, try to qualify for any program that we have. So if you think you can qualify for one of the other programs, please get with one of our loan officers. We have over 350 licensed loan officers in 15 different states. And for the DSCR commercial programs we talked about, we can do those loans in almost every state in the US as well, because those are considered commercial business purpose loans. So thank you guys for the time today. Again, these are just rates for today. We're going to do this every day. Please get with one of our loan officers. They can give you all the different rate options in just a few minutes, give you those beautiful quotes like Jose just showed you. And we look forward to working with you guys. Thanks, everybody.